Thinking about investing in real estate, but worried about the bad news you've heard? Well, let's clear the air. And despite the headlines, real estate can still be a lucrative investment if you do your homework and all the boxes are checked out. Okay. And I'm not just saying that because we recently bought a new home either. You can check out my IG page for our testimonial post. But today we're taking a deep dive into whether you should still invest in real estate. And instead of a one-size-fits-all answer, we'll explore a nuanced perspective on the real estate sector, highlighting where you should and shouldn't invest. But remember, this isn't direct investment advice. Always consult with trusted investment professionals like myself before making decisions, because your entire financial picture should be taken into account when considering real estate investing, okay? But in case we haven't met yet, I'm Dr. Javon Jackson, your favorite licensed fiduciary financial advisor, and welcome to another installment of Money Motives, good news from the world of finance, the report in 8 minutes or less, where every Wednesday around 1 p.m. we bring updates, uplifting developments, and encouraging trends for your financial future. Check out our YouTube channel for past videos. We've been dropping some gems for you. All right, so let's jump back into today's topic. First, let's address the elephant in the room. Most real estate projects are expensive and typically are financed by debt. Okay, so this means real estate is highly sensitive to interest rate changes. And traditionally, banks have been eager to lend for real estate because it's a tangible asset with expected future cash flows. And the law also supports foreclosure rights if borrowers fail to pay. But lower cash flow from office space rentals is a significant issue nowadays. With more companies allowing remote work, the demand for office space has dropped substantially. So start paying attention, actually, as you drive around your community, about your day. Notice all the for lease signs and vacant commercial space, okay? You'll see what I'm talking about. And this has led to lower cash flow for developers, making some projects appear unprofitable or really risky. And so even high-end developers like Blackstone are returning buildings to the banks. Yes, but this downturn, it affects retail spaces too, particularly those built to serve downtown office workers. And while some developers are repurposing offices into residential spaces, this comes with challenges like the need for window access and additional plumbing, and it's often easier to tear down and just rebuild altogether. And so banks are hesitant to acknowledge these problems openly because it could harm their stock prices. But the low interest rates before the Fed rate hikes encouraged developers to borrow and build, leading to an oversupply in commercial real estate. Now, many buildings face high vacancies. Class A office spaces that are ESG compliant, they remain popular with top tier clients, okay? Compliance. But older buildings, they struggle to attract tenants. And high interest rates also challenge home buyers. The pandemic, construction pause, and the high debt rates created a housing shortage. And new buyers, accustomed to low mortgage rates, now face significantly higher rates. Ask me how I know. And this hesitation affects both buyers and sellers. But for those with financial means, buying homes for cash and flipping them can be lucrative, especially in desirable neighborhoods. While office space might be optional for some companies, owning or renting a home is a necessity. With interest rates dropping about 0.5 point last week, let's hope that it continues to move in that direction, and then it gets even more attractive for buyers too. And it definitely looks like it will. And younger people who are advancing in their careers, many will eventually want to buy homes. In fact, they will need to buy homes to take advantage of the tax deduction. But government regulation also impacts real estate investment. And strict rent control laws can discourage developers from improving older apartments due to low returns. And so while other sectors like online shopping, warehouses, senior care, self-storage, they're all thriving, right? So remember, you can't generalize the real estate sector because demand and supply vary by area, property type, and economic conditions. And the best approach is to educate yourself on the risks and the rewards of each property type and area. And do the computations and decide on a case-by-case basis if the rewards outweigh the risks. So, in conclusion, real estate can still be a great investment if approached wisely. But do your homework and consult with investment professionals and real estate professionals. Your team, they're there to guide you into making the best buying decisions for your real estate goals, okay? So hope you found this video exciting and helpful, and it prompted you to get motivated to take some type of action to improve your financial future. See you next week for another episode of Money Motives, good news from the world of finance. Don't forget to like, share, and subscribe for more insightful tips on investing and managing your finances. Until next time, stay informed and financially empowered. See you guys next week.